probably the most positive thing that many South Africans will take out of that PMI number today is the employment index turning positive, and it's really been stuck in the negative for the best part of a year.
Yeah, certainly so. Good afternoon. So we had 9 consecutive months where the index was below 50, indicating that manufacturers are actually shedding jobs. So now for the first time in 10 months, we've actually moved above the 50 level. So certainly, I think that was, from our perspective, probably the most positive index from the PMI for this month.
Looking at the overall PMI number, 54.8, that's up from 54.6 in January. So not a great improvement, but it is well above that 50 break-even level at this stage, and it looks like it could hold there.
Yeah, I think one must also remember, if you compare it with what happened in Q4 last year, then the average PMI for the fourth quarter was around 51. So now we have the January and February numbers, we're now looking at above 54. So what it does indicate is that in your GDP numbers, the manufacturing sector probably accelerated a bit further in Q1, which is clearly good news from our overall growth perspective at the start of the year.
Well, we're looking at GDP this year for about 3.5%. The government really aiming to get that GDP onto a higher trajectory, so 6 to 7%. What sort of number of PMI would we be looking for if we were looking at a much higher GDP number?
Yeah, well, quite a bit higher. So I think during the times when the economy grew at around 5%, so if we go back to 2004, 2007, PMI was probably sitting not every month, but you're looking at a number closer to 60. Of course, the manufacturing sector is only 16% of the economy. So clearly, one has to look at also what is happening to some of your other sectors. But clearly, if you want the growth rate to go to 6-7%, of course, one can debate whether we'll actually get there. But you would certainly need the manufacturing sector to be growing at quite a substantially faster pace than it is currently.
Hugo, not all positive today. We had the PMI price index surging by 10 points to 80 index points, and this is one of the indices you don't want to see surging. So really reflecting what we're seeing on the commodities front at the moment.
Yeah, certainly so. And I think also if you look at it globally, some of the PMIs indices that have already come out for February, basically across the board, you can see the price indices are going up quite sharply. So as you say, reflecting the higher oil price, food prices going up. And just to put it into perspective, on the month in the SA PMI, we saw a 10 index point jump in the price index. So it's over the history of the index, which goes back to 1999, there's only been 4 months where you had such a sharp increase in a particular month. So it is quite stark, but as I say, it does reflect these sort of big increases we've seen in commodity prices.
We've also had the expected business conditions index declining by 5.8 index points. What do you think's causing that? Do you think it could be those price rises?
Possibly. I think one must perhaps start off to say that it is still at a fairly high level, above 60, so it does still indicate that purchasing managers do expect things to improve going forward, perhaps not at the same pace as previously. So besides the cost pressures, it might also be a bit of uncertainty creeping in, given the sort of every day we sort of bombarded by the negative news coming out of North Africa, the Middle East. So I think generally risk aversion has perhaps gone up a bit, which might be feeding into purchasing managers' expectations.
How about new sales orders and business activity? How are they looking, Hugo?
Well, especially on the new sales orders, it's looking quite good. And that's important given that index has the biggest weighting of 30% in the PMI. So at a level of 59, it's been sort of there for 2 months now. That is quite strong. So it does suggest that there is demand for manufactured goods. The business activity is still sort of lagging a bit at above 50, but at a lower level. But one would expect that if the demand remains robust, or if it is sustained at these sort of levels, that over time your activity levels will also start to pick up.
Hugo, where would you expect the PMI to go from here? Would you expect it to continue moving sideways as we saw between January and February?
Yeah, probably. I think to a large extent, we know that the domestic consumer is doing quite nicely. We expect that to continue for the foreseeable future. But then one also has to look what is going on globally. Now, for the time being, that the global factory sector is booming, but we still have this sort of question mark about how sustainable it is. It does seem, given the fact that the global PMI for January sat at 57, it does tell you that our own PMI at around 54 is lagging a bit. So there might still be some scope for it to go a bit higher, so playing some catch up to what is happening globally. But I don't expect, for what we know now, that we will see it substantially higher anytime soon.